Okay guys, and welcome to today's video. Today we're going to be looking at the fair value gap trading, precision and accuracy. This is just one of those videos to train you and drive home the perspective of the fair value gap trading concept as regard to smart money and trading in general. So I'm looking at the screen right now. Let's just say before this particular piece of price action happened, what if I told you that from this particular region, before this particular price action happened, if I told you at this particular region you should sell the market, would you have taken the trade? I'll leave that for you to answer. Or the other hand, looking at price action now that it has happened, what if I told you that with great degree of precision and accuracy, I would have arrived at this point and told you to sell the market here? Would you have believed me too? That will also be for your own discretion to choose or say. But in today's video, I want to show you how you will be able to arrive at this particular kind of setup in the marketplace, covering over 1,800 pips in one single week of trading. So that's what this setup is all about on the Aussie dollar, how you'd have been able to capitalize on this. I'm going to be sharing a portion of it, you know what I'm saying, because if I'm to give you the whole full details on this particular the reason why the market panned out to this point, is going to make this video longer, and that's not the plan. The plan is to keep the video as short as possible. I'm going to give you three elements that would have arrived at this entry here, at this point, this entry right here. I'm going to give you three elements that, which some of them I've shared before, and I'm going to drive those points home. Three elements that's going to make you a person that would have taken a trade like this on the previous week, still using the fair value gap concept. So without wasting further time, let's just get into it. So the first element we're going to be looking at is institutional order flow. And mind you, when we talk about institutional order flow, we're talking about how has the market be moving from the monthly, weekly and daily time frame. You understand? How has the market been moving in these three higher time frames? Because these are the institutional time frames: the monthly, the weekly and the daily. So in this case, we're going to use the daily, you understand, because it's a near term and a bank level time frame. So we're going to be using the daily. So we're going to be just looking at this piece of price action right here, as you can see. So if I ask you what cycle is the market right now overall here, it's practically in a consolidation. Good. But I just don't want you to focus on the overall picture. I want to just focus on this particular area right here. So if I ask you what is the market doing in this particular area right here, what is it doing? It's selling. It's on a bearish trend. Very, very good. Okay. So I want you to focus on the highs. I'm going to outline right here. On the highs, I'm going to outline right now. So all these highs to this particular region right here, what has been happening? Price has been respecting the highs. We have not seen price take out any of these highs at all. You understand? Up to this particular region. You understand? We have not seen price do what? Take out any particular high. So it simply puts to the point that the institutional order flow on the daily time frame on the Aussie dollar is on the bearish tone. You understand? So as smart money traders, we want to go into the marketplace looking for what? Selling opportunities. We don't want to go into the market looking for buying opportunities. All we are looking for is selling opportunities. Whatever is going to support our idea to take price lower, that's what we're going to the markets to look for. So in this case, we already know that to this particular point in price action, we are what? In a bearish tone. That's to this particular point right here. We're in a bearish tone. So we drop down to the 4 hours and we zoom out right here. And this is that particular high from the daily to this particular point. So we understand that we are what? We are bearish in the marketplace. So let me get this back. So we understand that the particular price action we're trying to catch actually is this particular high right here. This particular high, that's what we're trying to catch in the marketplace. So we understand that if I bring the period separator, you want to say this was happening like 3 weeks ago. This particular high, and bring that. Let me bring it here. This particular high over here on the from the daily time frame happened 3 weeks ago. So we saw this particular price action happening like last week, that's 2 weeks ago. And at that last week, because at the time of this recording, this is Sunday, the 3rd of July 2022. So this particular price action we're trying to explain right here, this particular one happened last week. So as you can see right here, the first element we have seen that we have identified is that market is what in a bearish tone. The second element we want to pay attention to is the time frame and the smart money divergence concept using the dollar index. So that brings us to the point that, okay, we saw price making a high here, price trades lower, consolidates within this week, and now we're in this particular week right here. So we still have our bearish tone idea. We're looking for bearish opportunities in the marketplace. Is that also? So we're anticipating bearish opportunities in the marketplace. So the next thing we want to do is we want to bring out our dollar index divergence to be able to our dollar index rather, and be able to see if there's any form of smart money divergence showing us that, okay, smart money are trying to take price lower in the marketplace. So in other words, smart money is trying to buy more of dollars and sell more foreign currencies. That's what we want to see. So we'll go to the dollar index. So on the 4-hour time frame to bringing in the period separator, want to look at our ranges. So on the Aussie right here, from this high, you want to say to this particular high right here, we see that we have a slope right here. Is that also good? And that high on the Aussie is this particular high right here, this low right here rather, to this particular high low right here. So we saw a slope upwards. So this shows that there's no smart money edge, and this is just for last week, you understand? So last 2 weeks rather. So if we take from this particular point, you want to say down to this particular point, mind you, we're using the benefit of hindsight, you understand? And we saw price create this divergence lower. We'll go to the Aussie also, and we'll also take from this particular point to this particular point, which is the same thing we have on the dollar index right here. So we see that there is a slope downward here, and also there's a slope downwards here, you understand? So this tells us now that smart money is truly present in the marketplace. They are edging and they're going to take price lower. Why? Because we don't want to see for instance, now the dollar index made a lower low right here. We don't want to see foreign currencies also make higher highs in respect of the divergence, or else that will be a sign of a false move, you understand? Because majority of the times price will move, even though price tends to move very well in that direction, it will move very well. You can see that in this particular slope right here, from this high to this high, and from this particular low to this place. You see that the movement of price was very short. It was short-lived, and that same thing happened in foreign currencies. The movement of price was short-lived. Why? Because when price made higher high in Aussie and lower high in the Aussie also, repeating the same kind of sequence here, making lower low and lower high on the dollar index, that is a symmetric price move, you understand? But this other one we have here, this other slope we have right here, is the inverse of it. We have lower lows, you want to say, and we have and we also have on the Aussie, we also have lower, so we also have lower high right here, you understand? So this is a crack in correlation. smart money views this as a crack in correlation. If you're a smart money trader, you want to have this kind of tool in your repository because it puts in your mind that okay, this is what the market makers are doing. They're edging price to take price to the main direction. So, and you can see from when we saw this particular smart money edging, what do we see in price? We saw price trade lower and the move was explosive downwards. You understand? Compared to this particular one, that price was symmetric, price just moved lower right here. So this is not a dollar index smart money divergence teaching, but I just felt like I should put that there to be able to help our understanding. So we have touched two elements now to be able to catch this particular setup right here. The one element we touched was institutional order flow, which is bearish, we arrived at using from the daily time frame. The second one was using time frame, which is dropping to a lower time frame with 4 hours, and secondly adding the smart money divergence. Now the third one we're going to look at is when we come into this particular new week right here, because I'm going to remove the period separator now. When we come into this particular new week right here, you understand, you get, and we're looking for new prices to go lower. You understand, we've seen all this particular price action happen here. We're looking for opportunities to sell lower. When we come into this new week right here, we want to apply one element, but it's actually two. I'm blending two elements in one right now. The first element we're looking for time of day or day of the week, which is the time element. Mind you, if you are familiar with my videos, I talk about time, the three factors that will make you a profitable trader. Number one, time. Number two, patience. Number three, discipline. So you want to look for number one, the time element, which is either the time of day or day of the week. The second element you want to look for is at this particular time of day or day of the week, you want to look for an institutional reference point. And in the case of this video, the institutional reference point we're going to be focusing on is on the fair value gap. Good. So we already know that smart money divergence is already on this particular pair. So we're going to remove that thing that helped us arrive it. That's the trend line stuff. It's just a normal thing on the MT4 platform. You can always use it on your own platforms. So now we already know that there's smart money edging here. We're going to drop to a lower time frame so that we can be able to identify the time of day and also day of the week, and also the institutional reference points we're going to be using, which is the third element that help us arrive at this particular trade setup. So right here, right now, you can see this is the new week. So I think I'll be bringing in the period separator back so that I'll be able to get time of day. Sorry, day of week rather. So now we understand that from this, if I remove this red line, we can see this small area right here. Let me bring that here. We can see this small area right here, this Sunday trading. Let me remove this vertical line. If we look right here, this is Sunday's trading. The next is what's Monday. You understand? The next day where we had the setup was Tuesday. So in Smart Money Concept, just like the way my mentor teaches it, he always says that you usually expect the high of the week on Tuesdays and Wednesdays. I'm sure you want to write that on your notes. You want to expect the high of the week. For instance, if you're in a bearish tone in the marketplace, you want to expect the high of the week on a Tuesday or on a Wednesday. If you are expecting higher prices, you want to expect the low of the week on the Tuesday or also on the Wednesday. These are high probability days where you anticipate high of the week or low of the week to form. You understand? To be able to catch that explosive move within a weekly range or a weekly perspective. So in this case, Tuesday was that day for us on the Aussie dollar. So now price started trading on the Tuesday and price started going higher. Right here, price started going higher, taking out the overall high of the Monday's trading, going straight to Sunday, clearing out Sunday's high also. And at the time of it trading high, this was also London session. So on London session, we saw an explosive move higher. So on the day of the week, that was Tuesday, price started trading higher. And on the time of day, which is the London session, we saw price trading also higher. So you see, we blend two time concepts there, day of the week and time of day. You understand? Trading higher into where? You know, the third thing you're going to be looking out for in this third element of this finding this particular setup is institutional reference point, and in this case is the fair value gap, and that's what we have right here. So I'm going to zoom out, you're going to see it clearly. That's what we have right here. So if I zoom that out, you can see the fair value gap just right here. Let me take out the period separator. So you can see it's just right there. This particular candle, this other candle, and this other candle. You can see this high then gets to this high also. So and what the price do on the London session, price traded into it, closing in the fair value gap, and since then all we have seen is what? Bearish prices all the way till Friday. You understand? And that would have been your own setup if you had seen this particular thing. So you see the level of precision and accuracy in trading just with this concept. So I'll go over the concept again. You need three elements, and each of these elements has their own brothers. So the first element, you want to know the institutional order flow, which we arrived at from the daily time frame. The second element you want to look out for is the time frames selection and also the smart money divergence, which is the second element altogether. And the third element you want to look out for is the time element and also the institutional reference point element, which includes the time of day, the day of the week, and also the fair value gap. In this case, that's what we're using right here to be able to arrive at this setup. So where would you have exited your trade? Probably right here below these lows. And what the price come for? Straight what? Into the lows, giving us 980 pips. That would have been $980 if you were trading with one lot size per trade. You understand? Okay, let's say you want to hold it for long, for throughout the week. You understand, which is expected and also reasonable. What are you saying right here? From this high over here to this low. Let me mark it out. To this low right here. Mind you, what we have right here is our dealing range. You understand? Our dealing range from this high right here to this low right here. You understand? Price traded from this fair value gap right here, straight, miss this particular, didn't get to the high in particular, but took out these particular lows right here, then took out the low. This is like a total soup, a liquidity run, and price traded higher. Pricing dropped into this 68,500 level, but on the next day, what do we see? We saw, let me bring the period separator. On the next day, which is on the Friday, we saw price coming straight into where? The 68,500 level, and since then price traded lower. So some of you would have said, you didn't teach me how to cash the whole move, because I know some of us will want to cash the entire move down to the week. But the truth is that if you're able to catch a trade, you understand, if you're able to catch a trade from this particular high to this particular low consistently every week, I tell you, my brother, my sister, you don't need any other setup. This is enough to pay you pay your family and make you financially stable, provided you have the right capital to trade the market. You understand? So you're able to catch this high from this fair value gap to this low right here, even without tapping into this particular price level. Won't you be satisfied? If you're not satisfied, then that means you probably have a lot of greed to deal with. You understand? But if you're able to catch this particular high to this place right here, you should be satisfied, because we're talking about over 1,000 plus pips right here. That, in other words, depending on your account size, you can scale these particular price movements into higher returns for yourself. You understand? If any money or risk manager know that you can catch this particular kind of move, they'll be willing to risk a lot of money with you. You understand? So I don't see any reason why somebody trading smart money concept is able to get this level of precision and not still be satisfied with this particular kind of move. But okay, the reason why I may not be able to tell you this particular how to cash to this end is because I don't want to make this video longer, but I'm just going to put a little nugget that's going to help you be able to cash that particular move. So if you look, if you zoom out actually on this particular you zoom out actually on this particular server, because I'm using the SNS platform. If you look at this low on the daily time frame right there, I just marked it out. That's 68,200 level. So let's drop down into the for 1 hour, which we have right here. We saw price drop into what, the 68,200 level. So that should be the maximum point you want to exit your price, at 68,200 level. There are a lot of reasons why price went down to 67,600 level, and I can't cover that in that video. But for those of you that want lower prices on how to hold longer, I just showed you now using from the daily time frame. I'll show you that again. You see this low right here? This is a consolidation. Mind you, that was what we said earlier. So price consolidated for a while and traded into taking out this low right here. So are you seeing it, why price actually reached for those low, this particular low right here? And you can see that price seeking liquidity at that low in this particular price region. So there are a lot of elements that would have made you hold your trade down to this particular low, but I don't see a reason why any one person, especially for a beginning trader or a trader on a journey to consistency, will want to hold their trade down to that particular level. You understand? Except if they are greedy. You understand? So you want to avoid greed. You want to take partials along the way, because price could have as well dropped to this level and reverse higher. Price can do whatever they want. Smart money can decide to do whatever they want to do with price. So when you're able to catch a sweet move like this from this particular high with this level of precision, using the time elements, institutional order flow, smart money divergence, a lot of secrets I just released in this video, and you're able to catch it down to this low, I don't think there's any reason why you still won't even stay in the market for the week. This is enough to pay you for this week. That was last week rather. And also, if you're able to find this particular setup consistently, I believe that's enough for you as a trader. So I'm just going to give you one quick bonus tip again, just to strengthen your mind about this institutional trading and smart money concepts, that you can actually find setups like this every single week. So I'm going to use past data to be able to answer that for you. So mind you, this analysis we just conducted was on the week that just passed, which was this last week, based on the time of recording. And if you look at the week before that, you can see that at this particular trading range, from this particular high to this particular low, we had an institutional reference point here, which is the order block. So for those of you that is not familiar with the order block, I'll leave the link around somewhere in this video. So what did price do in this new week right here? Price did what? Price traded into the order block, and since then we saw price go what? Lower. So you can blend the time of day, day of week, divergence concepts using the dollar index, and be able to catch this particular move. So moving backwards again in time, how would you have been able to catch for this particular week? I believe it will be the last example. So if you look at this order range right here also, from here to here, you can see that from this high right here down here, you saw price tapped into this high, and since then price did what? Traded lower. So what is this high right here? This fair value gap. So this is your fair value gap right here, which is your 1, your 2, and your 3 candle. So this high didn't get to this low right here. So price came, traded above this particular high, and since then we saw lower prices. So this is how you'd have found setups every single week, still blending the same concept I shared in this video. It will give you high level of precision and high level of accuracy. I hope you found value in this video today. Be sure to leave your comments in the comment section. I'll be sure to attend to them as soon as possible. And also, if you have any question as regard any concept or any idea I shared that you don't understand, be sure to also leave a comment and I'll be sure to get back to you. So thank you very much for staying true to the end of today's video, and see you in the next video.